stop. Before you invest one more dollar, I need you to watch the next 5 minutes. Because right now, thousands of people are opening their trading apps, picking a stock because their cousin told them to or because it's trending on social media. And they have no idea they're about to make the same mistake that wipes out 80% of new investors in their first 2 years. I'm not here to sell you a course. I'm not here to tell you which stock to buy tomorrow. I'm here to show you the one thing nobody explains before you put your first dollar into the market. And once you understand it, you'll never invest the same way again. By the end of this video, you'll know exactly why most people lose money. Not because the market is rigged, but because of one invisible mistake they don't even know they're making. And I'll show you the simple framework that professional investors use to avoid it. Stay till the end, because point number 3 is the one that changes everything. Let's get into it. Here's what usually happens. Someone sees a friend make quick profits. They feel that fear of missing out. They open an app, deposit money, and buy a stock or a crypto coin with zero research. Just excitement. For the first few days, it goes up. They feel like a genius. Then the market corrects, like it always does, and panic sets in. They sell at a loss. And they walk away saying, investing doesn't work for people like me. But investing didn't fail them. Their approach did. The truth is, the stock market is not a lottery ticket. It's not gambling. It is one of the most reliable wealth-building tools in human history. But only when you understand 3 core principles most beginners skip entirely. And that's exactly what I'm going to break down for you right now. Principle 1. Time in the market beats timing the market. Nobody, not even professional fund managers, can consistently predict short-term market movements. What actually builds wealth is staying invested long enough for compounding to work. If you'd invested a fixed amount every month in a broad index fund for the last 15 years and never touched it, you would have outperformed almost everyone trying to time the perfect entry point. Principle 2. Never invest money you'll need in the next 12 months. This is where most people get burned. They invest their emergency fund or money meant for rent, and then a market dip forces them to sell at the worst possible time, locking in a loss that would have recovered if they'd just waited. Before you invest a single dollar, build an emergency fund first. That's not boring advice. That's the difference between investing with confidence and investing with fear. Principle 3, and this is the one most people never hear. Diversification isn't optional, it's survival. Putting all your money into one stock, one sector, or one hot tip is not investing. It's speculation wearing investing's clothes. Real investors spread their risk across different assets so that no single bad decision can wipe them out. Here's something nobody tells beginners. Investing is not primarily a money skill, it's an emotional skill. The market will test you. It will drop 10%, 20%, sometimes more, and every instinct in your body will scream, sell now. The investors who build real wealth are not the smartest people in the room. They are the most patient people in the room. Ask yourself this question before every investment. Would I still be comfortable holding this if it dropped 30% tomorrow? If the answer is no, you're not investing. You're gambling, and you already know it. That one question alone will save you from 90% of the mistakes beginners make. So here's exactly what I want you to do before you invest another dollar. Step 1. Build a 3 to 6 month emergency fund in a savings account or liquid fund. This is your safety net. Step 2. Start with a low-cost index fund or ETF before you experiment with individual stocks. Let your foundation be boring and stable. Step 3. Automate a fixed amount every month. Don't try to time the market. Consistency beats perfection every single time. Step 4. Review your portfolio every 6 months, not every day. Checking your investments daily only feeds anxiety, not returns. Follow these 4 steps, and you are already ahead of the vast majority of people who jump into the market blindly. Investing isn't about being right every time. It's about staying in the game long enough for time and patience to do the heavy lifting for you. You don't need to be a genius. You don't need insider information. You need a plan, a little discipline, and the patience to let it work. If this video gave you even one thing you didn't know before, do 2 things. Subscribe, because I'm breaking down exactly how to build that plan step by step in the next few videos, and share this with one person who's about to invest without a strategy. It might just save them from a very expensive mistake. I'll see you in the next one.